Hello everyone, Houtan here. January was rough. Sales fell hard, inventory climbed, and prices kept sliding. I'm going to walk you through the numbers, what changed since December, and what I'm watching next, and how you can take advantage of this market or maneuver and get the best results possible. By the way, this video is part of an exclusive collaboration with top real estate YouTubers from across North America. We're each breaking down what's really happening in our local markets, the stuff you won't hear on the evening news or read in a generic market report. If you want a real inside look at what's going on beyond Toronto and GTA, make sure you check out all the videos linked below. These aren't random creators. These are people who know their markets inside and out. Okay, let's get into the stats. Here are the top line stats for January 2026. We had about 3,082 sales, down about 19.3% from last year. New listings were up about 10,774, down 13.3% year over year. Active listings climbed 17,975. The average selling price was at 973,000 and down about 6.5%. And the MLS HPI benchmark was also down 8% year over year. The slowdown is broad, but condos stood out. In terms of the sale, as you can see here, condos were down about 26% compared to last year, and average price were also down about like 9.8%, both if you want to compare 416 and 905. Looking at the detached properties in Toronto were down in terms of the sale about 16% and 13% total. Prices were down 7.5%. We're seeing semi-detached, same thing. Prices are down negative 9.7%, and townhouses were down negative 9.4%. So right across the board, we're seeing that prices have gone down close to 10%, which is quite a bit given that we've had about 10-15% compared to year before, and we're seeing right now about 25-30% down compared to the peak prices in 2022. Even in terms of the sale, we're seeing that right across all type of properties, we're seeing sales are coming down substantially from 13.6% in detached price properties to about 26% in condos. So you can tell this is just not one pocket of the market. Buyers are sitting out across the board, and condos are getting hit the hardest. And when we want to talk about supply and competition, we want to talk about the new listings, active listings, and month of inventory. We're seeing active listings and month of inventory are rising in both cases. Active listings hit about 17,975 in January, higher than last year. This is a kind of environment where sellers are seriously competing against each other, and buyers are gaining a lot of leverage on conditions, price, and closing terms. This is pure buyer's market. Now let's look at month of inventory, where we see and interpret how the market is behaving. So essentially, month of inventory means that if there is no new listings hit the market, how long will it take for the entire inventory to be absorbed based on the rate of sales and the speed that we're seeing. So let's look at these month of inventory charts. You can also see the trend as well, that condo month of inventory is sitting right around like six months. We've seen like it's gone down, but we can see it's well above average for condos. Condos usually on the good months we're sitting between 2 to 4, but right now we're seeing that condos are around 6. For detached properties, we saw right now month of inventory actually came down. It's above just above 4, which is like a balanced market, and this is just Toronto, right? So again, like you're seeing up and down, but like on like an extreme sellers market, when the market is super hot, we're seeing that is well below 1 month, but now we're sitting in a balanced market is about 4 months. Also semi-detached, you're seeing is roughly around between like around like 2.5 to 3. This is semi-detached because there are not that many semi-detaches in Toronto compared to the other property types. That's why month of inventory seems a bit smaller, because it's not going to take that much to absorb all the inventory in the market. In terms of the townhouses, we're seeing the townhouses month of inventory trend. It's moving around 5 months, so we're above buyer's market as well. So essentially, when you have 0 to 2 months is extreme seller's market, 2 to 4 is balanced market, and anything above 4, it becomes buyer's market. Now let's look at month to month direction, as it's important to see where we're going. On a seasonally adjusted basis, January sales were down compared to December by about 16.4%. That's a lot. In terms of the new listings, we saw new listings were down as well, as we had a lot of snow in this month, so people didn't want to list their properties. But total number of listings are up since it's been accumulating and not selling since December 2025. Both the benchmark average price tended lower by 3.32%, and now we're seeing the average prices in GTA are below $1 million, which is the first time in a while in GTA that we're seeing average prices are below $1 million. Okay, so let's just talk about why this is happening. First of all, driver one is affordability and rates. We're seeing that Bank of Canada, we're right at like 2.25%. Still rates are high. The prime rates are still a bit high for some people, right? And there's still that affordability issue. The main driver number 2 is confidence and job. When household feels less secure, they delay big commitment. This one is one of the biggest impact in my opinion, and it's the sentiment. The sentiment has shifted massively negative towards real estate investments, and just a lot of people have been hurt, and this will take some time for the sentiment to change. So I think people's psychology play a big role here, but that's where the opportunity rises, right? When a lot of people are fearful, you as a savvy investor can come in and take advantage of the situation. But again, there's some people are still not confident about their job situation, as unemployment is still not 100% with the trade uncertainty. So that's why we're seeing people are not making any big decisions. The other thing is that we're seeing the property prices are coming down month to month is the inventory and choices essentially. Active listings are up and they're elevated, and that pushes negotiations towards buyers. Sellers are holding off and don't want to have a serious price cut, and this is making the market frozen. But eventually we're seeing sellers are coming into reality and expecting that in order to sell, they need to drop their price. Here's what I'm watching next. Do listings jump when spring inventory hits, or do sellers hold off? Honestly, it depends. Some sellers will definitely jump in and we'll see some new listings coming onto the market in spring. But some sellers that don't have to sell, they'll probably wait it out until market conditions is better for them. Number 2 is, do condos stabilize, or are we gonna see heavy year-over-year declines in sales volume? Eventually, we'll see investors come back to the market as prices are coming down and rates come down and condo investments make more sense, and we'll see some positive cash flow. So we may see some investors coming into the market, and that as the prices are come down, eventually it's going to hit the floor, and then we're going to see the people are back onto the market where the investment makes more sense. The other thing is, does the benchmark price flatten month to month, or is it going to keep trending down? I think we're close to the bottom. Maybe we'll see another couple of months of price drop, but I doubt we'll see anything substantial. I think we're pretty much there. Number 4 that I'm thinking is, do we see a shift in buyers' behavior if rates move and see more buyers enter the market? Possibly we're gonna see as the market, we don't know how much more rate cut we're gonna have, but possibly we'll see buyers will shift their behavior and they may just get into the market as the affordability gets better. So my final thought for you, whether you're in the market that you want to buy, invest, or you're a seller. If you're a buyer or investor, right now it's probably one of the best times for you to get into the market. Are we at the bottom? Maybe not, but we're seeing that you have ton of leverage as a buyer and ton of opportunity and ton of options, right? So you can negotiate on the price, you can negotiate on the terms, closing timeline, all that stuff, and then that gives you more time without stress to go in, shop, and get the property that you want. Maybe you might see prices drop a couple of more months, but you can never exactly predict it. So might as well just go in, negotiate as hard as you can, and get the property you want. If you're a seller, on the other hand, you gotta be realistic. You were seeing that property prices, average selling prices are coming down. So honestly, you cannot even look at the sales prices from a couple of months ago. You got to look at what's around you, essentially. Who's selling and who's your competition. And based on that, price it smart and price it competitive. Otherwise, your property is going to be sitting on the market and you're going to have to chase the market down. So be smart, make sure that you price it competitively so you can take advantage of and maneuver in this market.